Hello, greetings everyone. In this video part, I'm going to be explaining to you how I use these lines on my chart. In the video part 7, I talked about trend lines. So I'm going to be explaining further on how I use these two lines on the chart. The blue line, as you can see, this blue line here, this blue line here, as you can see, is my 50 EMA, exponential moving average. While the red line here, the red line here is my 14 EMA, exponential moving average. So I'm going to be explaining to you how I use these two lines to trade. Like I said before in the first video I made, please go and watch the first video. You understand what I'm saying? In the first video I made, I talked about how important these two EMAs are to me and what I actually use both for. First of all, I use these two EMA lines to identify trend, directional trend. Take a look at what happened here. Take a look at what happened here at this point. At this point here, the red EMA line crosses, that is the 40 EMA, crosses the 50 EMA. It is simply telling me that I should be expecting a downtrend. That's exactly what happened here. Now, the price is down, heading down, as you can see, heading down. The price is what? Heading down. Beautiful. And how do I identify trend? Like I said in my video part 7, I normally go to the higher time frames to watch out what is happening, because the big moves happen in the bigger time frames. So here is New Zealand USD. As you can see the symbol from the top side left of the chart, New Zealand USD. And here is 1 hour time frame. So I will change this 1 hour time frame to weekly time frame, monthly time frame, I beg your pardon. The monthly time frame. What am I doing here? I want to check the direction of the trend. Where is the trend heading to? Remember, the trend is my friend, and the trend is equally your friend. So I can be able to, identify that the trend is moving down here. Those of us who have not watched my explanation on support and resistance, please refer back to the previous videos. You will see the importance of these lines on the chart. These horizontal lines on the chart, these are my area of support and resistance. So I can say that the price is heading down. And if you take a look at the two lines, the EMAs, the red here crosses the 50. Let me show you here. The red line crosses the 50. You can see my pointer there, here. It crosses the 50 on the monthly time frame, and the price is heading down. Now, what do I do? I've been able to identify that on the monthly time frame, price is actually heading down. So I will go to uh, the weekly time frame, 1 week. I click on 1 week. This is a week chart. 1 week chart has opened. And as you can see, same thing is happening in itself here. Same thing is repeating itself here. The price is actually heading down. The price is actually heading down. Corresponding what is happening in monthly time frame, the price is actually on a downtrend on a weekly time frame. So it's a beautiful one that I've been able to identify the trend on the weekly time frame. The price heading down. From this point, if you take a look at my pointer, you will see that the red line being the 14 EMA has crossed the 50 exponential moving average. That is the blue line heading down. So price is actually heading down. So the red line is below the blue line. Now I'll move straight to the daily time frame. What is actually happening on the daily time frame? Now here is the daily time frame. As you can see, the trend is equally down. The trend is equally down. You can see it's down, straight down. And I can identify a downtrend. One of the ways too you can equally identify a downtrend if you can see that the candle is forming lower highs and lower low. Look at it here. This high here, from my pointer, is higher than this high here. So this lower high and this here is lower low. This is, and look at this place too. This is a sign that the trend is down. So whenever you see the candle formation forming a lower high and lower low, the price is actually down. So from the daily time frame, we can see clearly that the price is heading actually down on the daily time frame. The monthly time frame, the weekly time frame is equally saying the same thing. So let me move to the 4 hours time frame. Here is the 4 hours time frame. You can see clearly, gentlemen, that the price is actually heading down. And from this point, the red line is below the blue line, the 50 EMA. So the price is heading down. Let me squeeze it. The price is what heading down. You can look at this high. Here is a high on the 4 hours time frame. And this particular high here is higher than this high on the 4 hours time frame. So gentlemen, we can see it clearly that the price is heading down. So I can connect these 2 points using my trend line. Connect these 2 points using my trend line 2. Now, there was a bounce on the trend line. Price came down from this point to this point, returned back to this trend line, and price surged down. So this trend line is a strong area of resistance. In as much I have another horizontal line here, this my monthly horizontal resistance, that price can equally come down to this place, come up to this place, then move down. So this is a strong area of what? Resistance. Right? Now, on the 4 hours time frame, I've been able to identify that price is actually what? Heading down. It's on a downtrend. So I will move to 1 hour time frame. I want to explain something to us here that is very, very important. This is how I actually trade. I trade, I follow trend, and I trade. I want to show us something here. Watch closely the blue line from this point. Watch closely the blue line from here, then here, then here, another one here. Can you see it? Can you see? Can you see it? I want to show you these points, right? Please watch closely. This point here, 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 you can see the point. I want to explain something to us now. And here. Now, as you can see, price came down. The red line crosses below this 50 line, this blue line, that is the 50 EMA. And the price began to drop, drop down, then went back up and retest this 50 EMA, the blue line at this point, right? You can see it. Then the price dropped down again. Please let me use this trend line to explain to you. The price dropped down from this point to this point, right? Then went back up and retest this 50 EMA here, the blue line. I want you to pay attention to watch what I'm saying. The price now dropped down again from this point to this point and went back again to retest this 50 line here. And the price dropped down from this particular point, this line, the 50 EMA where the price went to retest, dropped down to this point, then went up again to retest this 50 EMA at this point. Price now dropped down drastically down here, right? Went back up to retest this 50 EMA here. And this is the current price. Today is 27th of September, and the price began to drop down again. Now, what can you notice here? That this 50 EMA has become a point where price gets to and it drops down. So after identifying trend, what I do is to look at these EMAs, especially the 50 EMAs. Anytime price began to bounce at this 50 EMA, I am looking forward to take a trade. That's what I do. That's what I do. So this EMA has become a point where price comes to bounce and it drops down. It bounces and it drops down. Can you see it? From this point, it came down here, then bounced at the 50 EMA, dropped down, bounced at the 50 EMA. Please follow me cleanly. Follow me keenly. Drops down, return back, bounce at the 50 EMA, drops down, went up again, bounced at the 50 EMA, dropped down, went back up again, dropped, bounced at the 50 EMA, and the price surging down. So the 50 EMA, whenever I see things like this, especially on the 1 hour time frame, the time frame I love trading the most, I do take my trade after identifying the direction of the trend. For instance, let me explain to you. I am on this trade right now, running. I am on this trade right now, running. This happened some few hours ago here. Let me take this out so that you can see it clearly. And let me enlarge my chart. At this point, look at the pointer. Price came, bounced at the 50 EMA, and it began to drop. Now, excuse me, what I do at the close of this candle, you do see this candle, this bullish candle, sorry, I beg your pardon, bearish candle, this big bearish candle, I will take a trade below here. Let me get my measuring tool and explain to you. I will enter a trade below here. I will place my stop loss above here. Then I'll be riding the trade. The stop loss is 54 pips. If you're going for ratio 1 to 1, you go for 54 pips. So my take profit will equally be 54 pips. Let me try and get it right. So I'll be going actually for 54 pips, ratio 1 to 1, or allow you to, write down. So my stop loss will be above this swing, somewhere here. My entry point is here. Here's my entry point. Are you with me? Sorry, let me take this out. Okay, let me explain to you what I mean clearly. Here's my entry point, right? Here's my entry point. Stop loss here above the swing. Then take profit. I can go for the same size. The same size if I'm going for a show 1 to 1. So this is it. So we get it right now. Stop loss. Take profit. Did we get it now? So here's my entry point. Here's my stop loss. I might take profit on if I'm going for a show 1 to 1 with baseline. So you can extend more, you can allow it to ride. So this is what I do. So now at this bounce, I'm taking the trade here. Immediately it's going to close below this 14 EMA. If one is aggressive, you can take a look at the candle formations here and decide to take a trade. But I normally wait for price to close below this 14 EMA, then I'll take the trade. So I'm on this trade right now running. Let me show you here. Did you see what happened here? Let me show you what happened here. This trade made me some good money. This is what is happening. Price came, bounced at the 50, and it's dropping down. This is bearish engulfing candle. I will take the trade below here. Sorry. I want to be able to explain this in clearly to you. Okay, my entry point will be here. Are we seeing it? My stop loss will be above this swing high. Then look at what happened. The price dropped down to this point. This is money ratio 1 to 1. Patiently, let me get across the measuring tool and see entry point here. So this is 205 pips. Price dropped down 205 pips. And then at this my entry point here, this is a stop loss about 66 pips or maybe below 66 pips. So it's about 66 pips. Like I said before, the stop loss should be somewhere in here. So that is the stop loss. It's less than that. There's about 60 pips or 66 pips. Then I have 205 pips here. You understand it now. So this is it. Now look at what happened. Let's refer back. Did you see it's another potential trade here? Here is another potential trade again. Let me enlarge this. You understand? You take this trade. Remember, this is an area of support. This horizontal line is an area of support. So you can write it down to this support, and then you're off the market because you don't know what that could be reaction here. So these are what I look at trading with my moving averages. I look at it in different pairs, and this occurs regularly. So, in conclusion, let's have a recap. First, the first thing you do is identify the direction of the trend. The trend is your friend, and it's not all the time you trade. If trend is not moving in the direction you please don't take a trade. Make sure you're able to identify the direction of the trend from the larger time frames, and that will give you the clue where the market is going to. So it is clear that we'll have a downtrend on New Zealand USD. And like I said before, this trade running right now, I'm on it. Clean. So beautiful. Thank you for watching. Please click like below, like my video, subscribe to my channel, and leave a post below. Thank you and have a good day. Thank you.